Well, as we begin 2024, the big question is, will interest rates begin to trickle down? Will they reduce in the new year? Well, there are some indications that could be the case. The Fed meeting last month in December had some pretty good news. We're going to tell you about that coming up next. Welcome into the Smart Mortgage Show. I'm Ben George alongside Bill Linton. Thanks for joining us here on the YouTube channel. If you haven't subscribed yet, please do so. We appreciate your support there. Bill is Regional President of Cross Country Mortgage. You can find everything online at smartmortgageshow.com. Bill, the new year, 2024, I know we've been asking this question a while, but are rates going to start coming down? But it seems like there's some good news, right, after the latest Fed meeting in December?
Yeah, we're seeing a lot of indication that rates are going to get better through 2024. So they got worse for the most part in 2023, although we're at the end of 2023. Rates were in the mid 8s in October. Now we're down in the mid 6s. So we've already started to see the trend. But what's important is behind the trend is a lot of data that supports the interest rates to continue to decline. So inflation is still continuing to cool, and the readings for inflation. So this is a data-driven formula, right? It's not like we're just kind of hoping. There's a lot of math. There's a lot of economics. There's a lot of forecasting that goes into it. So all of the mortgage economists that we subscribe to feel like 2024 is going to be a better year. And the Fed is also hinting towards that as well.
Yeah, I think that's the biggest takeaway I think that you shared with me from that meeting in mid-December was that the Fed has kind of pivoted a little bit from what their previous policies were earlier in the year, correct?
Yeah, so they actually made some statements that were really strong. So Chairman Powell actually said the words that he will start to decrease the federal funds rate before inflation reaches the 2% benchmark. And right now we're rated about 3%. So that means that in 2024, we feel like inflation is going to continue to cool and continue to decrease even before we get to the benchmark to try and have that, that soft landing that everybody's hearing about on the news. Well, in order to do that, we need to start to allow it to loosen, right, to ease a little bit on this very tight economic policy, even before we get, because if we wait until we get to 2%, well, it's probably going to go below 2. But maybe we can ease into that 2% number and hold there.
Yeah, that's good news, and hopefully that will be the case. At least some indications are there. What is your expectation? And I don't need you to try to predict the future, Bill, because we can't do that. But just generally, what's your expectation for the new year in terms of what we might see for rates?
So based on the Fed and their most recent meeting, it's put us in the mid 6s, and I feel like we got a really good boost. But now we're going to need probably some more data to continue to, the market has kind of adjusted, and we need a little bit more data to go lower. So 2024, I feel like we're going to spend some time in the 5% range. I feel like we should probably be in the 5% range for more than half of the year. That would be a really good thing for housing and home buyers. And now there is one caveat to all of that is if there's any kind of geopolitical issue or extenuating circumstance that directly affects this movement, this is based on what we can see and where we're headed without any kind of dramatic market mover coming from the outside.
Well, we do have election coming in 2024, so who knows what that could bring, right? It's always gets a little choppy during those times. But the good news, though, I think anybody would welcome if you say rates in the 5s. I think anybody looking for a home right now would jump to that immediately, wouldn't they?
Yeah, and actually, Ben, there's been a lot of studies done and surveys where people say rate at about 5.5% is where somebody gets excited that that translates to an affordable payment based on that rate. So definitely a good thing. The other thing was the Fed's their dot plot, which we'll share an image of, but it's basically the 19 members of the Federal Reserve Open Market Committee. They all vote on where they see rates going. And in 2023, it was unanimous that there were not going to be any decreases in interest rate, as you'll see evidenced by the dot plot chart. But in 2024, there is some varying in the opinions, but it's that 10th vote. It's the kind of the middle of the road. So we could see a 75 basis point decrease in interest rates next year based on what the Fed members are projecting will happen. And then there's some other components outside of that with the yield curve, which could give us even a little bit more boost. So there's definitely some market factors, and especially with the Fed wind at our back, we feel like we shouldn't be back in the sevens, that's for sure. We should move towards, the 5% range in 2024.
All right, so again, you can check out that dot plot. It's hopefully helpful. You kind of see what Bill's saying there, but yeah, it's kind of interesting to see how this year compares to next. And just by looking at that, it seems pretty favorable. And of course, I haven't looked at many dot plots in my time, so maybe I'm reading that wrong. But it seems like it's pretty optimistic by just judging that chart alone.
Yeah, and Ben, we kind of went over it, a little bit before the show, right? It's pretty straightforward. And I would say for anybody else who, if any of this information intrigues you the way that it intrigues me, give us a call. We'd be happy to talk about it, and also talk about, if you're a realtor partner, how does that affect your year next year? If you're a home buyer, how does that affect your plan for next year? Give us a shout. We'd love to talk through it.
Yeah, you can always do that. Just simply call 484-352-4151 or find contact information in the show notes as well. And I think also, Bill, a good time to remind people, if, the anticipation possibly the rates could be trickling down over the course of the year, somebody might say, well, I don't want to get pre-approved now. I don't want to get the home now and start the process. Let me wait a little bit longer to see if rates go lower. You're able to lock in a lower rate, right? As that process begins, if you get pre-approved for, let's say, 6.5% now, if rates do drop down, you're able to adjust that, right?
Yeah, so absolutely. You don't get your rate locked in until you're under contract because the rate's attached to the address of the property. So if you don't have an address and you've not made an offer and it's not been accepted, we don't lock your rate. There is one option that you can use to lock. It's called the lock and shop option, but definitely would not make sense in this market. So outside of that, if you get pre-approved now, we're not locking in your rate. As rates get better, we're going to take advantage of the better rates. And the other thing, Ben, is we really believe is, you and I have said many times on the show, you want to have as much time in advance to plan. We can help you to put yourself in the very best position possible. So even if you're not buying for 6 months, let's pre-approve you now. Let's pinpoint all the pressure points and make sure that you're doing everything perfectly between now and then to put you in the best position possible to make the strongest offers and have the strongest terms. So you can never start too soon.
Well, best thing to do is to get that free 15-minute mortgage and loan consultation. Just give Bill a call, 484-352-4151, and begin that process with Cross Country Mortgage. Again, you can find everything we do online at smartmortgageshow.com. Please hit subscribe. We'll have more market updates every month to try to update you as to whatever Bill is really watching in any given month, whether it be interest rates or Fed meetings or trends in the market, whatever that might be. We'll try to share that here on YouTube. Thanks for watching the Smart Mortgage Show, Bill. Appreciate your time as always. Looking forward to a good January, hopefully.
Thank you, Ben.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.